Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. December corn futures up a half cent at 5.59 3/4. November soybeans down 6 at 13.34. September Chicago wheat up 1 3/4 at 7.28 3/4. September spring wheat up 2 cents. September Kansas City wheat up 2 cents at 7.12 1/4. September spring wheat is up 7 1/4 at 9.20 1/4. If you guys are listening on the podcast, as always, really appreciate it. Remember, I mentioned here the last couple of days that you may want to consider a different podcast app aside from Apple. The Apple app has had some issues here as of late. It tends to be very, very slow in terms of uploads and can't seem to really get this stuff together here. I may be having some technical issues. Let's see what happens with this. I might have to start over, guys. Hang on one. I think I'm back. All right, sorry, having a little bit of technical issues here today. So in any case, yeah, check out those other podcast apps. Let's get into the markets here this morning, and I apologize for those technical issues. This is actually the first time that's happened where I cut out midstream. In any case, we've got a USDA report today. This is the monthly crop production and Usda Report. It will be out at 11 o'clock Central Time. The U.S. corn and soybean yield numbers are the big ticket items here, guys, and those are the numbers that will be watched most closely. When it comes to those yield numbers, they're put together via two different means. Farmer surveys is the big thing. And keep in mind, as I've discussed in past podcasts and episodes, these farmer surveys, your response rates are very poor, 50 to 60%. When we saw that June acreage and stocks report, we saw numbers below 50 or 60%. So keep in mind that the data that you're going to see on that end of it is incomplete. Second, you've got satellite imagery. I don't know how satellites work, so there's always the potential for a wild card here. Aside from the yield numbers, other items to pay attention to would include the Brazilian corn crop, U.S. spring wheat production, anything out of Canada, the spring wheat crop there, the canola crop, Russian wheat production, export demand, especially in regard to old crop U.S. corn. I think you should see a reduction there. So there's a lot of things in this report that could move the market here today. U.S. ethanol production fell last week. Weekly output 986,000 barrels per day. That was down 2.7% on the week and down 5.6% versus the same week in 2019. That was the first weekly print below 1 million barrels per day since late May, I believe. So not necessarily a great number. Some people would argue that maybe ethanol plants are having a tough time procuring physical corn as a reason for the decline. Others would maybe just point to margins, which have deteriorated, production margins. Gasoline demand was down about 3.5% on the week, down 5% versus the same week in 2019. The U.S. Plains and Western Corn Belt also may catch some rain here over the next 7 days. I had those maps up before my system went down here. But in any case, this morning's Weather Prediction Center map offers up to an inch of rain for a lot of areas of North Dakota, South Dakota, Nebraska, Kansas. These are not huge amounts. They may be too late for some crops, but the rains will certainly be welcome in some of these areas. I think they could help the soybean crop in particular, which is really still a work in progress. And you've got the prospect of above normal rainfall in a lot of those areas, the plains and the Western Corn Belt in particular, during the 6 to 10 and 8 to 14 day periods. So it looks like the second half of August could be a little bit better for some of these areas that have been very dry, including the Dakotas down through Nebraska, Kansas, Oklahoma, parts of the Western Corn Belt. More analysts are reducing their estimates for Russia's wheat crop. ICAR's down to 77 million from 78.5 last month. Econ also cut its estimate. I'm not sure what their new estimate was. USDA could follow suit today. The U.S. government has the Russian wheat crop at 85 million, which is probably too high. They've had hot and dry weather, and that's why you've seen the downward revisions to these private forecasts. Russia is the world's largest wheat exporter. It's because of these issues in Russia, partially at least, that we've seen some better prices and strong price action in the wheat market. U.S. exporters sold some more soybeans to China yesterday, another 132,000 metric tons, same amount that we saw on Tuesday. As of last week's export sales report, Chinese purchases of new crop U.S. beans were 49% below last year's pace, but they're above levels that we saw in 2019, 2018, and 2017. This year's new crop Chinese soybean purchases out of the U.S. are about on par with what we saw in 2016. We've got an export sales report this morning from USDA. Corn sales should be negative to maybe positive 200 for old crop, 400 to 900 for new crop. Soybean sales negative, maybe up to 100,000 for old crop, 500 to 900 for new crop. Wheat sales should be 250 to 550. Remember, guys, tomorrow is last trading day for August soybean futures. Make sure to examine any remaining open positions that you have there. The cattle market finished lower yesterday. The box beef market was up sharply again. Cash cattle has been kind of thin, so we'll see what develops here next couple of days. U.S. dollar is about flat. Stock market's up just marginally. The S&P's up 2.5 points. The Dow is up about 40. Bonds are flat. Precious metals just marginally lower. Crude oil is down 38 cents at 68.87 in the September WTI. I apologize for those technical issues today, guys. I hope that doesn't happen again. I will talk to you same time tomorrow.